So in this video, we're going to look at the 1040 form and just kind of go through the basic areas or things that are required here for filing a tax return. This form can be used by anyone. Some people who have more basic or simpler um, requirements can use 1040A, or people that have just W-2 income can use 1040EZ. But they all have the same basic components. This one just has a little more detail to it. So let's walk through this. The first section is going to be for your name, address, social security number, um, and filing status. So the five filing status that are available is single, married filing a joint return, married filing separately. Married filing separately, by the way, is the most onerous or the highest taxed filing status. So that's for people that are getting divorced and they just can't deal with getting together to file a tax return jointly, so they file it separately. So this is not something that people would choose generally unless they had no other option. Head of household is a little less taxation than single, and then a qualifying widower for with a dependent child for people who have lost their spouse. Then we have exemptions. Everyone can take an exemption for themselves, and or if there's a spouse involved, they can take an exemption for the spouse. Can also take an exemption for any dependent children that they have. So basically, when you add things in here, it will fill in these boxes with the total number of exemptions. Then the next area of the return is the income. Income can be many different things, and the IRS says that worldwide income is what we have to do. So if you do earn money outside the United States, you still need to report it. Even if you're living outside, there are some specialized rules for people who live outside the United States. But if you're a U.S. citizen, you must file a tax return with the federal government and report all worldwide income. So you can see we have some wages, of course, that are reported on W-2. Taxable interest is interest that you earn on cash accounts or bonds. Some interest is tax exempt. For example, in California, we have California bonds, government bonds, that you don't pay tax on the interest that you earn, so they're tax free. Dividends are income that are paid by corporations to provide income to their shareholders. Taxable refunds are refunds from usually the state. If you overpay the state and took a deduction for the taxes that you paid, you will have to show that as income in the year that you receive the refund. Alimony is received, that's taxable. Business income, if you have a small business like a bicycle shop or a pizza place or something like that, that is not set up as a corporation or as a partnership. So business income, line 12, would be for a sole proprietor. Capital gains are the amount that you earn when you sell an investment. So if you buy a stock at $100 a share and sell it for $150 a share, you would have a capital gain on that. IRA distributions and pension and annuity distributions are when you retire and start taking this money into out of the pension plan or the IRA to fund your lifestyle. Rental real estate, if you own an apartment building or a house that you rent out, would be reported in line 17. Farm income is for farmers that have crops that they sell. Unemployment compensation is line 19. That's for people that are on unemployment, and some of those benefits would be taxable. Social Security benefits are for people who are retired and are drawing on their Social Security. Some of that is taxable and depends on the income levels. Other income is just kind of a bucket for anything that doesn't fit into one of these other areas that you have as income. Gambling income would be included in that, or just other income that you might get for whatever reason. So that covers the first top of the 1040 form. I will then move down to adjusted gross income. So these are things that would be adjustments to your income. So some educators can deduct money that they spend for the classroom. There are some specialized rules for certain business expenses. For health savings accounts, line 25, if you have an HSA account, you can deduct those premiums or those expenses that you pay. Moving expenses, again, those are subject to some rules that if you have to move for your job and you meet the criteria, then you can record or report these. And these basically reduce the amount of income that you would report. Self-employment tax is for people that have a Schedule C income, and they have to pay self-employment tax, which is in effect for sole proprietors the Social Security. So if you're a wage earner and you have a W-2, you'll pay Social Security through your employer. Well, if you have your own business, you have to pay self-employment tax, and we'll see how that works when we get into the cases. We can also take deductions for funding a SEP, simple or qualified plan. If you're self-employed and have insurance expense, you can deduct that. There are some alimony. If you pay alimony to someone, you can deduct that amount. In effect, we're shifting that. They would have to report that as income, and you can reduce your income by that amount. If you make contributions to an IRA, this is where line 32 would be the place where you can deduct that. Student loan interest deduction is here if you have a student loan, and you can report that on line 33. Tuition and fees comes from 8917. There are some requirements there where you would be able to deduct your tuition. So that would bring us down to adjusted gross income. Adjusted gross income is a very common term used in the tax world for your income minus these deductions. So that ends the first page of the 1040. I'm going to stop this now, and then I will prepare another video that starts at the top of page 2. Stay tuned.